Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is our gold, silver, and copper webinar. I'm going to show you how to trade gold, silver, and copper. We're going to outline exactly how to do that on your MT5 platform. We're also going to go through some of the trading view pairs and show you exactly where to find these assets. We're going to talk a little bit about margins. It's important that we understand the margins and what's happening in the metals markets right now. Today, as far as a daily range, I haven't seen anything like this. This is taking me back to 2011, Arab Spring, trading crude oil. Right now, we have just huge volatility across the gold market. The silver market is the wild west of metals right now, and it's absolutely blowing up. Copper, it's weird. We're starting to get an inverse correlation set up between copper and gold and silver, so it's absolutely fascinating what exactly is happening here. I think that it's an interesting dynamic that we're in. We're in an interesting situation. A lot going on in the world. A lot to talk about. We're probably not going to get into the news today. I'm going to let this news play out for one more day, but the big stories, United States saber-rattling against Iran. Many people believe that a strike there is imminent. That is why U.S. oil has spiked and is now trading $65 because somebody somewhere believes a strike's coming soon. That is an absolute guaranteed. That's why WTI crude has exploded to the top side. Also, you'll see that in the United States, in Georgia, the FBI has conducted raids against the election center in Georgia. They seized 700 and something boxes of ballots related to the 2020 election. This is an issue that's gone on in the United States for a long time, and many believe that this potential thing could upend your midterm elections. There's going to be some serious things come out of this with regards to November's vote. That's huge. So we're seeing a lot going on right now. Crazy ride in equities, metals on fire. We probably should just be doing a news stream today just to trade, but we had this metals plan. So we definitely want to get on board. We want to get on with our metals tutorial. I'm going to walk you through this. I'm going to update you with a couple of trade ideas, and then we're going to dive right in to what it is to be a precious metals trader. Okay, remember, if you haven't registered yet for our newsletter, hit the Switch On newsletter. The Shane Explains series, you're going to have more of that coming your way. Just enter your email address. You're going to get the weekly newsletter. And then also you're going to have the ability to join our live streams, which you're already on. So they're right there. The markets aren't short on information. They're short on clarity. We do our best to clear things up, exactly what you need to be focused on in a Monday newsletter. I write it up Monday. We get it out to you Tuesday before the UK session. And I have to tell you, a lot of times we do the work. We have everything lined up. And the news changes. It's changing by the hour. Never seen anything like it. Never seen anything like it. And I'm a true believer that when we are faced with something that is truly unparalleled or unprecedented, we're going to have opportunities we never even knew existed. And that's when we get involved. That's when we start taking the big chunks of money out of the market. And a lot of people don't want to believe that. They believe that you make money when the markets are calm and they're quiet. Well, there's an old saying, it's what is it, millionaires are made in bear markets? Well, I think that day trading millionaires, day trading 100,000aires, day trading 10,000aires are made when the markets are absolutely crazy. When you talk about a daily range like we saw today in gold and silver, and it's not done yet, if you get on the right side of those markets, absolutely unbelievable potential. Profit potential. Of course, you've got to have an approach and you've got to be able to dive into those markets with confidence. If you don't and you try to chase price around on a day like today, you're going to get destroyed. So what we're going to do here is we're going to try to figure out ways to get into the market. We have got a few ideas. I've got an EA that I'm working on, a custom EA that's going to be hitting the news wires here relatively soon, and we're going to promo that today as well. It's not quite ready yet, but we're getting there. Bobby Bob, good to see you over in the How to Trade community. Ralph H., Tuku, Andrea Garwal, good to see Andrea. Lita, always a pleasure. Really some great news. I've got a lot of great messages lately, a lot of really positive starts to 2026. So if you're in the winning camp, congratulations. If you're not, that's okay as well. We're going to dive right in, so let's get going. A sip of coffee, and away we go. Let's see. Actually, Jason, good to see you, Jason. Peace. All right, when we talk metals, we talk volatility. That's the number one thing. Gold, silver, copper. These markets are typically volatile because they're not as deep as your Forex pairs. They're not as big, but they are significant. They are significant because the volumes have been growing over the past several years. The metals are becoming one of the staples of global finance. Everybody's trading metals right now, and that's because of the volatility. Now, it's always a chicken or the egg. Do we trade metals because it's volatile, or is it volatile because we trade metals? Well, I mean, we really don't care. What we need is something that moves. Gold, silver, and copper are moving. A couple other things are moving too. Let's start off with a couple trade updates. Bitcoin, GDP, the Trump speech, and Bitcoin. Bitcoin is coming off. This was a trade idea that I had out last week. We got hit. We were finally entered. This was really the nice payoff I wanted. I didn't quite get it. The low was 86,000, and then there was your break. And then right here, you're sort of coming off hard. Now you're pulling back right to that area. 4-hour charts, what I'm watching closely here on Bitcoin. We're looking for the next key level up there right around 88 and a quarter. Not 88 and a quarter, 88,025. So we're looking for a test of that 88,000 level to get the payoff on this one. I like it. I like it a lot. I think we're going to have an opportunity here. We're starting to see the bearish action sort of subside a little bit. I'm not really too scared of this one. I think we're going to get a nice bounce and come back. We're going to let this one bleed for a little while, though. Remember, I typically attack it at a 1-to-1, but I'm going to be watching this one. I'm not necessarily going to pull the plug down here immediately. I'm going to go ahead and wait. I want to see how the next 4-hour candle sets up. And boy, if we get a hammer to set up on this time frame, oh boy, we might have an incredible trade. Right now, taking a little bit of heat. What, about $900, something like that? Nah, a little bit over that. About 1,000, 1,200. Not really too worried about it. I think we're going to be okay. But that's got to play out. And anything could happen. So remember, if this market gets really ugly, you got to scratch it, and then we'll come back at a later date. But right now, 85.5 is the line in the sand. It's under pressure. Once that 85 goes, then we're looking at 80s, and then typically you'll see a big washout of retail under there. If it happens, we'll be there to cover it. But right now, I still think there's a little bit of reason to be holding longs here in Bitcoin, but we won't go along for the ride all the way down to 75 or 70 if that does develop. So we definitely wanted to start off with that trade update. The other one was crude oil, WTI crude oil. This was one of those trades that I absolutely loved. I thought it was great, and it depended on your broker whether you got the money or you got late to the party, if you showed up late to the party. Now, make no mistake, these Fibonacci levels for U.S. oil are very strong. But when you have a geopolitical event like Trump saying, okay, we're getting ready to strike Iran, they've got the Armada, I guess, has arrived in the Middle East, the aircraft carriers and things. This level right here, 63, 61, we were selling 57s. A lot of brokers, it went to 53, 54. I don't know if your bid ask got you, then you got paid off before the market really came back on the news. We need a 5-minute chart here, not a 3-minute. I don't know anybody that trades a 3-minute chart, but that's okay. If you do and you're doing well, great. But this action right here is what we wanted. We had sort of that sell idea was right up in here, right around 57. So if you got filled right here back on the 28th, then you made money. No question about it. Yesterday, that was easy. The next trip up, not too bad, went right up there to about 57. So that would have been sort of your entry if you didn't already get filled. Came off pretty well in just a few minutes down to about 37. So you had about a 25 pip, about a 15 pip payoff there. And then you took a little bit more heat right up here to about 83. Still not a very big draw. And then you got a nice crash right in here to 28. So that was sort of your 25 pip move, somewhere in that vicinity. 29 pip move. We were looking for about 50 pips. I was looking for something right down in here. Didn't get it. So there was plenty of chances to make some money on that trade. But when it finally got washed out, it took off, and that was because of the news event. No question about it. Iran strikes are going to be a temporary short-term bullish market driver. No question about it. Right there. There you have it. So interesting stuff out of Iran that drove crude oil prices north. You've got a weaker dollar. That's supporting crude. I'm still bearish. I think when the crash comes to crude oil in the next several weeks, it's going to be significant and severe. But right now, geopolitics is keeping crude oil up. A weaker dollar is keeping crude oil up. And we're seeing prices at 65, and we've seen them rotate right around 60 for a majority of the North American winter. We just got to wait and see exactly what happens. All right, let's go ahead and get on with it. We're looking at gold today. So, gold, silver, and copper. A few things to remember before we go diving headlong into these markets. There's a couple different ways to trade metals. Number one is going to be your futures contracts. You need to always sort of be aware of the futures contracts when you're trading commodities, especially metal commodities. The second is going to be the spot market. Now, that's what most of you out there trade. If you're trading, say, with Switch Markets, or you're trading with any of your brokerages internationally, a majority of the time, you're going to be trading a pair, essentially the XAUUSD, the XAGUSD, the XAUUSD for copper. You're going to be trading those spot pairs. Now, we cover all that on the live streams every day. Pretty much we cover gold and silver lately. There's one other way you can trade them that Switch Markets offers, and those are CFD products on futures contracts. I'm going to show you exactly how those work in just a second, but the best place to begin any discussion on metals is going to be with your CME Group futures contracts. This is where the market essentially for metals is made. Okay, we got a few other comments. Gordon Williams, good to see you. Gordon, Steve Francis, always a pleasure, guys. Let's see. John, good to see you, John. Welcome. T. Marina, hello, T. Yes, sir, gaming. Gold looked pretty flat until the New York session. That's when the move to battle. I only trade the Asian session. Yeah, I mean, New York session's pretty much where it's at for volatility when it comes to most asset classes. Tina Jin, good to see you, Tina. Welcome. Eyes Hazy, the USA knows how to do it. Big liquidation sweep. Yeah, huge selling. Incredible action. We're going to get to the charts here in a second. It's like the Asian session pumps up the price, and then the New York session locks in the profits. Well, I mean, what it is just a function of volume, eyes. When all those players come to the table, typically the market moves. Now, for metals, most of the time you're going to see a spike in liquidity right around that 8 a.m. Eastern. So about 90 minutes ahead of that cash open in New York. That's when you typically get the volume to start entering the market, even though you do see significant volatility and volumes traded during that London session as well. So if I'm a metals trader, they're true 24-hour things. I would definitely be looking at London, New York is being the market drivers, in my view. Okay, let's start off with our futures contract discussion. Now, when it comes to futures, they can be complex, and a lot of people are like, what's a futures contract, and how do I even trade it? The biggest thing you need to know if you're going to trade metals is that the futures contracts are going to have an incredible input, and they're going to really dictate what these things are selling for. Now, we're right back to the chicken or the egg argument. Is gold valuable or gold futures priced because it's gold, or does the gold futures contract sort of drive the gold spot? I think it's the futures contracts that are sort of the engine that pulls the train. And the reason why is they're priced out in advance. So when we start to see, your deferred month contract, something like a February 2026, you'll see that there's just a tremendous amount of volume here. Let's go ahead and back this off just a little bit. There's going to be a tremendous amount of volume that's coming in. So right now, what we're dealing with here in February, 20,000, not real great. March, 12,000, April's where the front month is. So right now, we're pricing our futures contracts according to what we believe gold's going to be worth in April. Now, an ounce of gold in April right now is being priced at about $53.64, and I'm looking at my spot contracts, $53.48, $53.49. Now, that's absolutely fantastic. That's it's a little bit counterintuitive to what we usually see. Typically, you see front-month futures contracts and typically spot being priced sort of at a not a bit of a discount, but at a premium, because when you wait, a bird in the hand always sort of is worth more than two in the bush. Well, take a look at what's happening in gold. It's really not sticking towards the normal rules of backwardation where these deferred month contracts are lower than your current month. We think that gold's going to keep going up, and that's what the futures traders believe. Now, you can see that this area right in here in May, we go from about 54.11 to 5400 in June. 5400 is what? Lower than 5411. That is sort of where you're shifting gears and starting to believe that maybe this thing normalizes. Maybe the market normalizes in June. What happens between May and June? You get a new Fed chief. You're going to get a shift in interest rates. That's why that's priced the way that it is. Now, the contract months for like a gold, you need to be a little bit, you really need to be a little bit cautious about gold, because gold monthly contracts listed for 26 consecutive months, any June and Dec in the nearest 72, but every month doesn't get volume. So pretty much every year, December gold is going to get a lot of volume. All right. I know I'm getting into the weeds with the volumes, but it's important that you understand which contracts are in play. So right now, April's in play. The reason why? That's where all the volume is. Remember, the volume has to be the volume needs to be on the contract you're trading. That's what's known as a front month. Now, this number right here, 53.77, that's what really is dictating your pricing in gold right now. Your spot gold market, spot gold's trading what? 53.48 right now. And now you've got a futures contract, which is trading at a bit of a premium over that. That means that you're probably going to see a little bit of bullish pressure with regards to that basis. I don't want to get into basis, but those spot prices are going to rise to reflect where the futures numbers are. So what do you need to know about any of that? Well, you need to understand that the futures market has an incredible pull. When you start to see maybe an April gold sell off big with big volumes, you're probably going to see that same type of pressure there with regards to spot gold. So understand those correlations. Now, right now, you've got spot gold's off about 1% on the day. And it's been absolutely crazy. And you're not seeing that same type of volatility reflected in the futures markets. More than likely, you're going to see this gold rebound. People still aren't dumping their futures contracts. So that spot gold, as we move forward in time towards April, probably going to rise in prices. That's how the hedgers are going to look at it. That's how the institutions are going to look at it. It can be very difficult there to try to understand that from a fundamental basis. You don't need to know all that. What you need to have is a technical perspective, and you have to know what to trade. So if you're going to be looking at gold futures, GC is going to be the symbol that you look at. They have full size and micro contracts. If you're in the United States and you want to trade gold futures, send me a private message over at How to Trade. I'll get you lined up with exactly which symbols and probably some input on your brokers. Now, silver works much the same way. Silver, you've got your futures contract. You can see that you're going to have a real similar situation with the volume, except the volume right now is on March. Always remember the months. They're specific to each asset. You need to understand where the market is. So right now, the market is trading March 2026 silver futures. priced at about 114.88. There's a bit of a delay on these because this is just free data off the website. So right now, spot is trading 116. Spot's trading more than the futures contract. That's the opposite. That's the opposite of what we just saw with gold, right? So what is that? That's called backwardation. All right, that's how these things typically, how futures typically work. The deferred month contracts are typically worth less, but take a look at what's happening in silver. Now you're getting a premium the further you get out in the future. The metals markets are functioning backward. They're not backwardation. They're backward. There's a disequilibrium in there. People believe, specifically the hedgers and the institutions, they all believe that the prices of these metals are going to keep rising. Now, right there, November 2026, that's interesting. That's down to 112. Fascinating. December's at 118. Right now, our spot's at 116. This stuff right here is how markets get discombobulated and wind up all over the map. Keep an eye on your futures markets if you're interested in trading metals seriously. One more thing, copper CME Group copper. You can see very, very similar to what we were just looking at. We're looking for the same keys. Okay, now March is what we're trading. March 2026, 183. What's it printing? 620. What's copper right now on the spot? 618. Pretty close. Pretty close. What happens as we roll forward in time? Not a whole lot. You'll notice that copper is the laggard. There's not as much interest in copper. Not as much volume in copper. Be that as it may, you're still going to need copper. This volume right here is what I would call a sweet spot. 183,000 contracts. That's fairly attractive. That means there's good volatility and there's a lot of action in that market. Okay, so now we know a little bit about futures. And the biggest thing you take away from all that is, remember, your futures contracts are going to have an impact on your spot pricing in your gold, your silver, and your copper. All right, they're also priced at what we believe these assets are going to be worth at a future point in time. The symbols that you're looking for in gold, and these are all on the CME Group, they're offered by the CME. You're looking at, actually they're COMEX, but they're offered by the CME because the CME bought the COMEX. In any case, GC for gold, all right, SI for silver, and then what was copper? HG for copper, if you're interested. Now, how do we trade these things? The most common way of trading metals, probably in the world, aside from institutional participation and scalpers like me trading those futures contracts, is going to be on your spot market. Spot market's easy. So if you go just right over to TradingView, you can see XAUUSD. We cover this every day. This is sort of the spot pair that we look at. Probably one of the biggest contracts in the world, one of the most popular. Everybody's trading this one right now. XAGUSD. That's going to be your spot silver market. You can see that the today's range is absolutely astounding. We're going to cut it open here in a minute and break down where these markets are going. And XCUUSD, right there in copper, 920 EMA crossover, beautiful bid back on the 25th of November, is really taking you up quite a bit, over 20%. But it was a huge volatility day for all of these things. Over on your MT5 platform, what we're going to want to do is we're going to want to go ahead and take a look at what is offered by our switch markets trading lineup of assets here, especially with regards to metal. So you're going to have the XAUUSD. We know that. The XAGUSD is also available. You're also going to have some CFD products that are based on futures contracts. Now, remember what I just covered there? March silver futures. Well, this is a CFD contract offered by Switch where you can trade that futures contract with your silver market. Now, why this is beneficial and why this is advantageous over to maybe what I can do here in the United States is you have a CFD product, you can really take your leverage down to almost nothing. Now, in order for me to do that, I have to go to a micro futures contract, and those typically are not having the same types of volumes that we're seeing on the normal size contract. That can be very difficult for me. So what we have here is a CFD where all you do is adjust your lot size, and you can easily trade this. As far as copper, I did not. I went through the lineup, and it should be an XCUUSD. That is the symbol. We did not find it. I did not find it on the switch markets. However, what you do have to trade here is a CFD that covers your futures contract. So right now you're trading right around 623, something like that, and that's per pound. I believe copper is denominated in pounds. The other two are in ounces. Interesting. So what we have here is a lineup of contracts we can trade. We know exactly pretty much how to trade them. We fall back on our technicals, any type of strategy you'd like. What we're going to do now is I want to execute a few trades on gold. I want to show you sort of an illustration. Now, you'll notice that we've got a handy dandy little arrow there, a little arrow that sort of popped up and you've got an opportunity here potentially to get along. This is our 9 EMA strategy. And what our 9 EMA strategy is being crafted into right now is going to be a nice EMA. So I've been building some EMAs right here that are probably, well, there's no probablys. They're probably going to be available to you guys next week as a free EA download. I will show you exactly where to find that when the time comes. But we've got a 9 EMA EA that does everything for you. You drag it, you drop it, it plots the moving average, it plots the RSI, and it also gives you an indicator. It gives you a buy indicator right there, and it'll give you a sell indicator when conditions warrant. The buy occurs if this area right down here has been beneath 30 in the previous 7 bars. You're looking to buy on the first bar close above your 9 EMA. It marks it on the chart and sets up your trades. So that's relatively straightforward. You can see right here on this gold USD, this is the kind of market I'm talking about. This is what I'm talking about. There's a lot of people, and I've got a lot of great feedback on the 9 EMA, a lot of real stiff criticism. I genuinely like it all. Just bring it all. Points of views, safety tips, whatever you want to call it. Bring whatever you want to the comments. Let me know what you think of it. But the big thing we need to remember here is if you're trading the 9 EMA, you need to be in a volatile market. You need to be in a volatile market. Now, in the video that's coming out and the EA and everything that you guys might check out if you'd like, I explained how to use the session finder EA. And we're trying to find sessions and overlaps. We're also looking at the ranges. The ranges of our trading bars themselves is something that is a bit of guesswork. You have to see whether the ranges are really tight and small like this or whether they're bigger. And if they're too tight and small, you step back to a different time frame. If they're big like this, then it's all systems go. This right here is a textbook trade of a 9 EMA trade that's fantastic. You have a huge move, really a significant move here. And then you've got sort of that rounded area that we base out beneath 30. All right, we're in oversold territory, and then we're looking to buy. Our EA marks our buy for us, and then we're just off to the races with our long. We're building our risk versus reward. Maybe we're shooting for the top of market structure. Maybe it's just a static 1-to-1, 1-to-2, 1-to-3. But this trade right here was absolutely fantastic. All right, let's dial this down to maybe a 1-minute chart and see what we have. Okay, you'll see the purple, and this thing's still a work in progress. We're going to make it a little more pretty a little bit later today. I got to get back into the actual code, but essentially what you were working there was sort of a sell against what I would call just a face ripper, but it's also on the 1-minute chart. Bars aren't really that great, but you did rally up. Man, you might have got stopped out right there. You might not have if you put it up there a few pips, and now we're coming off. So right now, do we have a trade 70-30? Not really. Not really. We don't have a trade just yet. So that would be a 1-minute chart on there. So let's go to an XAUUSD. I would think that we're okay. Right there, we've got a trade. Right there was our 30 bang. Let's just go ahead and sell the market. We're a little bit late to the party, but let's go ahead and do it. So we've got our sell active. We should have been hit right here. I'm going to have that arrow offset beautifully by the time we're done, but you can see that this market is really trucking. So in order to align our stop loss, something like this, you're going to be right up there above that swing high. Your profit target can be anywhere you want. That really is up to you. You could be putting it down on that order block. You could be shooting for this order block. You could be looking for a 1-to-1 type of a scenario, which is my favorite, or a 1-to-2 or a 1-to-3. So I'm very, very interested in systemic trading when it comes to metals. I believe it's a pretty good environment to be trading on, and the reason why is because you have an opportunity to really trade something that's extremely volatile every day. Now, on our MT5, I just sent them short. I sent one lot short. Now, you'll notice that the profit there, we're looking at a spread that's absolutely huge. I mean, it really is. It's a big, pip-wise, it's a big spread. One lot is a significant position. Significant. So you're going to want to always dial that down to 1 to 3% of your total account balance. You're not going to want to be overextended trying to trade full lots on something like an XAGUSD or even on a gold. So always remember 1 to 3%. Now, there's lots of things that you can do to essentially dial your risk in. And it's very, very important that you understand where to find these tools because it's a big part of metals trading. Absolutely a big part of metals trading. Right here, you go to switch markets over here. You're going to go right there. You're going to go down to tools. And what do you have right here that could be just an incredible, incredible value? We've got all these things: swap fees, margin calculator, volatility calculator. But what if you wanted something that was just more of an automated type of an approach? What could you really do? Well, you wouldn't be looking under tools. You'd probably be looking under resources, maybe EA tools for traders. We've got a free EA here that shows you how to do your risk management. Risk management EA. You go ahead and download that for $4 or $5. I recommend upgrading to MT5 if you haven't already. And that's going to give you a chance really to download this and dial in your exact risk per trade. And that is absolutely imperative. If you're trading metals right now, you've got to be in the business of managing your risk. 1 to 3% on any given trade. That risk manager EA is going to tell you your exposure. It's going to show you where to put your stop loss, where to put your profit targets to start building some decent trades. That's the number one thing you have to do. So right here, what did we do on this silver chart? And it's going in our direction, and you can see all the thousands lining up. Don't fixate on the money. Fixate on the process, because you're probably not going to be looking to make 5 or 10 grand on a trade like this. Remember, if it comes your way, it can also go against you. Bottom line is this. We had a really structured approach to a volatile market, and we had an incredible opportunity to profit. So right here, what did we have? Okay, we just got closed out at profit. We have the 9 EMA strategy. This is a situation where this absolutely is singing. 1 minute chart. Why can we trade a 1 minute? Because our bars are significant. We've got good ranges on these 1 minute bars. They aren't bad at all. Blow this up a little bit. MT5, I just apologize. It's the way that it is. Graphically, it's not a strong platform, but your order entry, it's very good for that. I find this one-click trading very, very easy to use. And there's all kinds of trading. I mean, you can pull up a trading dome if you'd like. That's the traditional way that I trade futures. Typically, I have a great big trading dome that looks something like that, and then I get all the lines filled out so I can see it, see where price is all the time. If you want to use a dome, you can certainly do that. Also, you've got you just right-click over there on your market, and you can just put up an order, a nice order like we do on TradingView. Very simple market execution, or a pending order, which can function like a limit order, whatever you need. Type buy limit, sell limit, buy stop, sell stop, buy stop limit, sell. I mean, you have stop limit functionality. That's a great way to be precise and play breakouts. I haven't even talked about that stuff really on these live streams, trading breakouts. So you've got everything you need. You've got a stop loss. You've got an entry point. You've got what really is going to make this thing sing and make some of you incredibly successful is your ability to align profit targets. Now, I'm one of these guys that is very conservative. You watched a lot of these streams. You know me. 1-to-1. I'm already out. I've already got my $5 grand from that trade, and I'm smoking a cigar, or I'm going to go buy a truck or something. That's the way I look at trading. I play for money. I play for cash. It's not necessarily the only or the right way to do things. A lot of these trend traders in the silver market are making a fortune. They're making fortunes because they're getting in on the right side of it. We're trading a 1 minute chart on silver, pretty much against the long-term trend. We're with the intraday trend, but we're against the long-term trend. I would say that's more of a high-risk trade. I have no problem taking a 1-to-1 and walking with that. It's a pretty good trade. All right, let's see if we can find another one. I got to answer some questions too, guys. I'm way behind on the live chat. Thank you for bearing with me. This right here, you've got a 1 hour chart there on your gold. I could try to drag and drop it. We're having a little bit of problem with our functionality with regards to multiple charts at the same time. Okay, right there. Okay, we're up and running. You'll notice our indicators didn't pop up. Don't worry, I'm on it. That's not going to be a problem. But this right here, really a nice sell there on your gold market as well. That's your silver. Let's go right here to gold. I want to drop gold in here. Okay, so what do we have in gold right here? Do we have an opportunity? Potentially, yes. We've got a 1 minute chart. We've got a 1 minute gold chart. We're coming down a little bit. We're well beneath our 9 EMA. We're coming down right near our 30. Now, the idea here is when we go beneath the 30 and get a close back up above that 9 EMA, that's our long. We'll get an alert to pop up, and then we should get an arrow there. Arrow's just sort of what we're limited to with MT5. It's not the most robust platform. I did have a question earlier, though, and I do want to show you guys. Let's see where if it's open or not. Let's go to tools. You can see that's an incredible dump going on right now. Let's go right here to the meta quotes language. And essentially, I mean, this is what it is to be writing script, you know. So we're using advanced AI to help you write script. And some of the things, you can see all the different iterations I have of this thing. But you can see that you have a really great opportunity to get in and write script. And that's incredibly useful on something like metals, where you could take a strategy, build it. I mean, we could theoretically just go in and build EAs specifically for metals. I've done that on TradingView. I'll show you that one in a minute as well. Interesting stuff, though. Right now, gold coming off. So our trade, essentially, Where were we right there? Okay, we went down to 27.12, 1 minute chart. The bounce back will be the close right up above that, and then we should get our gold arrow if things are functioning properly, and they may or may not be. Like I said, we're still debugging it, but for the most part, it does show up pretty well. Let's go ahead and give this one a minute to simmer, and I'll answer a few of your questions. I know I'm way behind. Okay, Steve Francis, will this be available on TradingView or only MT5? It's going to be available on MT5, Steve, for right now. That's sort of the idea. Those are the premium platform that Switch Markets offers. That's what we're going to stick to it. Building it, I have to be honest with you, building it for TradingView would be a hell of a lot easier. That meta quotes language is a bit of a challenge for me. I'm in the United States. We don't trade. I don't typically trade. Well, you don't trade anything on the meta traders. Everything I do is on TradingView, Ninja, or CQG, platforms like that. Let me see. Okay, let me see. Gordon, so why the indicator did not trigger for the crossover under the 9 EMA? Yeah, because it has to be qualified 7-bar look back on your RSI. So the strategy is simple. It's keying on your RSI. So when your RSI isn't oversold right here, if we cross over, right here we broke RSI to the downside. So if we cross over, get a close over that 9 EMA, you're within 7 bars. So we're on the 3rd bar. So 1, 2, 3. Okay, right there. That's what you have. That's what you got. So you've got right there, you've got your, this one right here. Your alert pops up, right? So your alert pops up. That's going to be your buy signal. So let's go ahead. We'll just buy the market. You're going to want to buy. Now, here's the beauty of this. You don't have to just buy on the close. That's how I approach the entry. But you could wait for a pullback. A lot of folks that trade this 9 EMA wait for a pullback towards the moving average. What's important is that you align your risk. Okay, so right there, I know exactly where I need to go. Swing low, that's where I'm at. Okay, right there, we could do that. You could also pad it right up here. Okay, you could put it right beneath the trigger bar. But in effect, that's the EA. That's how it functions. You get an alert, you get an arrow bar, and then you get essentially your buy signal. So right now, we're going a little bit positive. We're doing all right. So what would be a good take profit? Is that decent? Is that good enough? Not really. Is something like that good enough? Could you put it way up here? Of course. Market structure, 1 minute market structure right there. This area is pretty good. This right here, what could I do right now if I wanted to? Augment the strategy. I could move my stop loss up there if I wanted. There's no rules. The rules are whatever you want to make it. So if I had a stop loss right beneath that, could I do something like this? Yeah. You just make that thing work. You make it sing for yourself. Could I exit right now and take the money, take the $800? Yeah, could. Over time, that'll eat you up because eventually you're going to lose. Let's let this one play out. We got a pretty good stop loss. I get questions about trailing stops all the time. Could we put a trailing stop on this and move it up according to symmetry? Absolutely. Absolutely. You can do whatever you want. Creativity is the only thing that binds you. It really is. Just remember that a loser is a loser is a loser. Eventually, you're going to get in on one of those, and it's going to knock you out right away. So when you start cutting off these trades, it can be extremely difficult. Right now, the 9 EMA is functioning very well. So could I move to break even right now? Of course I could. Could I move it right here? Of course. Trying to catch a runner? Absolutely. That's up to you. Now, you see right there, okay, now we got filled. So we got 2 winners. I really couldn't have drawn that up any better. But trading metals right now is a good idea. The 9 EMA, especially when the markets are flying like they are right now. Absolutely crazy. Okay, we sort of got it on a strategic sort of sidebar there. I wanted to show you guys that because I think you're all going to like it. I really do. But it's a pretty good thing. Let's go. I got a lot of questions here. So Gordon, okay, I covered that one. Yeah, the indicator triggers when the RSI is in the proper conditions. So Ralph H., is it true that gold has an inverse relationship with the U.S. dollar or the stock market? At one point it did. At one point it did. And that was one of those things that you'd say, okay, gold's up, stocks are down. Right now, we can't really say that. You can see right there, gold's down, stocks are down. I would be very careful establishing those correlations and trading it. Typically, when you see safe haven participation, it means something bad's happened in the stocks. Now, as far as what does that mean, big picture, could mean a lot of things. I would be more focused on the dollar, the relationship of gold to the dollar. When you see the dollar sort of as weak as it is right now, and I don't even think we've begun yet, but when that dollar starts coming down, you're probably going to see bids hitting gold. And that's just a basic inflation hedge. That's how commodities typically function. Now, as far as stocks go, stocks are tricky because we have certain sectors of these indices that'll carry the whole index. You've got, is gold, sort of inversely correlated with tech stocks? I don't know. Seems like devalued currency and cheaper money is going to boost big tech, and it's also going to boost gold. Something to think about there. I think it's a great question. I think that if I was going to if I was going to assign an inverse relationship to anything with gold, I would say it's the dollar. So let's look at a gold chart. Well, let's just do it right here. Let's go ahead here. Let's split this. Let's go right here. And let's put up the DXY. Let's put a daily up on the DXY. And this is one way you can always check correlations. Okay, so what do we have here? Daily chart. That's just a basic 50-100. Take a look at this. You've got your 50-100, 50 SMA 50, SMA 100 on the dollar index on the daily. That's getting ready to cross over. What is that? That's called a death cross. And that's pretty much what we've been talking about. I mean, we've read this thing pretty well. So what are you looking at here out of gold? So gold, you got this nice big rally, right? Nice big rally. What do you have in the U.S. dollar? Tanking. So if I was going to say that you need a relationship, a correlation, I mean, it's all about the dollar. It's all about the Benjamins. No question about it. Dollar down, gold up. That's the clearest way I could show you a correlation. Is it the same for the US 30? Not really. Gold up, US 30 flat. Something to think about there if you're thinking correlations. If you're interested in the correlations, you can go right here with Correlation Trader, download the correlation tool and calculate the correlation between any market, MT5. That's another EA add-on. A lot of EAs in there if you guys are interested in trading EAs. Let's see. I got way behind on the YouTube chat. I'm way behind, guys. So let me see. All right. Team Marina, the metals tickers are named after their periodic table element names. Good observation. Good observation. I didn't even think of that. I just memorized them. Very nice, T. Crypto Masties, is it time to buy mining companies? What do you guys think about Gold Resource Corporation, NYSE American, Goro? All right. Let's do it. Is it time to buy Goro? That's a great question. Here's the Gold Resource Corporation. Usually when I'm looking at a stock, I always like the monthly. Okay, so is it time to buy? Well, let's take a look at what we've got. So historically, if we're talking about where a lot of the bulls think this thing's going to go to, it's right here. It's back in between 2008 to 2012, and that was the great financial crisis. So you're starting to think, is it time to buy it? Well, I mean, you're at $1.49. You're at $1.49 a share. At one point, it was the darling. It was at $28 or $32. So you're looking like at a 30x payoff. That's what a lot of people are thinking. They're saying, okay, well, gold's higher now than it was back in the crisis times. Is it a breakout? Clearly, you have plenty of room to the top side. There's no question about that. Monthly Bollinger Bands, you're definitely breaking out. If you wanted to buy, you probably could wait and get a better price. Let's go to a weekly. Could you get it? I mean, even from $1.88 down to about $1.50, that's not bad. It's 30 cents. I mean, pardon me, no math, but 38 divided by 188. I mean, you're still looking at, it's off about, 20%? So do you want to buy it at a discount, or do you want to wait till it gets a little bit worse? Tough to say. Before I got into something like this and I bet on a Gold Resource Corporation or a Goro, I would have to know exactly what their plans are and what assets they have. I want to know mining leases. I want to know production levels. I want to know accessibility. Are they able to get capital? Can they actually bring new projects online? Where are their mining operations at? Are they in South Africa? Are they domestic here in the United States? Where are they? I mean, the big gold mines aren't too far from here down in Nevada. I knew some guys that work down there in the gold mines. There's silver mines over there in Idaho. Are they domestic here in the United States, or are they international? So that's how I would have to do it. Nobody's expecting them to make any money, so earnings are flat. Revenue, you're looking at $25.8 million, so clearly this is a very, very small company. Are they a winner? The only way that something like this would win, it's a great question, Crypto, but the only way something like this would win, a stock like this would win, is if they have access to some sort of lease, something that gives them an edge. Maybe they're going to sell some of their assets to bigger companies. But if you're looking at an earnings report coming out in the 11th of March, and your revenue, your top line or your bottom line estimates are only $25.8 million, that means it's very small. Interesting, though. Never looked at it in my life. Okay, let me see. Gold Resource Company. Okay, here we go. It's a small cap miner with roughly 80% silver and 20% gold in Mexico. Well, the big question is Mexico. Thanks for, I should have just read the rest of your message. The big question is Mexico. What happens down there politically? What happens down there regulatory-wise, regulations? I would have big questions. Are they able to export to the United States? Does Trump single out Goro and bury him? Who knows? Interesting. The stuff like that interests me, especially at $1.49 a share. I mean, you can go pick up a couple thousand shares and not worry about it. I'm sorry, I'm way behind on the live chat. Tina Jing, people use C traders now. Yeah, I've really been sort of asked to take a deep dive into C Trader. I'm going to have to take a look at it. I don't know much about it. Joshua, good to see you, Joshua. Welcome. John Gage, is it advisable to use a trading bot? A trading bot, I don't know. I've never been a trading bot person. I've had automated systems that I've let run in the past, but I've never really been a trading bot guy. Copy trading, I think that's what you mean. Feel free to do it. Just manage your risk and everything. It's up to you. That's up to you. That's any more guys with AI, and believe me, I'm not a computer whiz, and I'm sitting down doing some advanced coding and things using AI. It's unbelievable technology. It really is. I'm blown away to get something coded like I coded over the last few days for that 9 EMA. To get something done like that in the past would have cost thousands of dollars. So I feel bad for the coders, but it's pretty easy to do now. You just got to be patient with it and understand how to ask the questions to get the code. All right, let me see. Blue Shadow, what platform do you trade with? Good question, Blue. I've traded over my career. I've traded with a lot of different ones. I've traded with, back in the old days, I was trading with Sierra Charts. I was trading with Wave 59. I don't even know if those are still around. Sierra Charts is, I don't know about Wave 59. I had Sierra Charts. I had Wave 59. I had CQG Integrated Client. That thing was like $1,500 a month at the time. I've used the retail applications of CQG's platforms. I think it's S-Trader or something. That was pretty good. I've used TradingView. I've used NinjaTrader. That's probably one of my favorites was NinjaTrader. But yeah, I've used a lot of them. Used Ironbeam. So there's a lot of them out there, and that's not to mention just your big brokerage, your investment places. They also have trading platforms you can use to trade futures. As far as that goes, and then back in the day, FXCM, when they were in the United States, I had some of their platform trading Forex. So I've been around a little bit. Personally, Blue, I think that TradingView is pretty good. My analytics all come from TradingView because it's easy. It's really easy to use. Let me see. Joshua, good to see you, Joshua. Welcome. Hello. All right, guys. As far as what we can look at, what we can expect, I can give you a few of my market reads on what I believe is going to happen here in your metals markets. Very simple, very basic stuff, but still pretty good. Let's go ahead and start with silver. Okay, so silver, incredible range today. When I look at a range like that, I say, okay, what was the top side? The top side was 121, and what's the bottom side? 106. That's a $15 range. That is a $15 range. It's unbelievable, that kind of range. And what I mean by range is from the top to the bottom. You'll notice that the pullback zones, somewhere right around 110. I mean, I would be very, very surprised if there wasn't really any good bidding right down there at 110 at some juncture. But this crash right here, you know, you're sort of up. You're up around here. You're up around all-time highs, 121, and then you just absolutely crash right in this area right here. So a nice little bounce. You know, there's your 1 minute low, 109.96, and then there's your high right there at 111. I mean, that's a $2 bounce, and you're talking about just a few seconds. And then compression right around 108 to 110, which is just incredibly difficult to hold. And then you get sort of the rally from there. So, you know, if I was intraday trading silver or something like that, which, you know, you've got to really be careful with what you're doing. How do you trade something like this? Well, you know, you have an order block down here. You know that. So you've got an order block there. Interesting. Lower Bollinger Band sort of lines up with that area right around 109.90. That's probably a pretty good late-day support zone. You got some bidders there. That was a bit of a demand zone earlier in the day. You probably could take a long scalp from there if you wanted to, just sort of play in this range right here from 121 down to 106. I mean, that is an absolute face ripper. That right there, that blew a few accounts out. That's pretty scary stuff if you're wrong. If you're wrong on that. Late day, the game has definitely calmed down, at least on the 30-minute time frame. You got an opportunity to bid down here. You just gotta really watch your risk. Really watch your risk. Don't let those get away from you. Remember, dial your leverage way down. Over at Switch, they've increased the margins up to about 2%. So you've got to be very, very careful with what you do here with silver. Remember, you're not just on the hook for the money you deposit. If it goes against you bad and you're on the hook for 50 grand, 75 grand, you're on the hook for it. So you've got to be careful with your risk. Make sure that you have stop losses down. Make sure that your leverage is doable. Don't get overextended. That's a face ripper. That right there, billions probably changed hands in 30 minutes. And if you're on the right end of it, it's fun. But if you're on the wrong end of it, it's catastrophe. Something to think about there. Okay, let's go on over to gold. Gold, real similar thing. Right there, I mean, this right here is opening bell, ding, ding, and then the big crash. Let's go ahead and back this off. Let's go to our daily. Excuse me. So there's your daily. Spike low, spike high. There's 5,000. I love 5,000. That'd be great. I would love to see this market move a little bit higher before we got the big pullback, and then we could sort of really dive in down here with a little bit of confidence. We're just not there yet. So to the top side, we sort of have a 125. I think 125 is a pretty good topside destination for silver. We might see some compression there, but right now we're starting to see the point of control set up in gold right around, 5,500, somewhere in there. So you've got to have that on your map. There's a lot of traders in there, and they're doing business. 5,500. Keep a close eye on that. What does price do at that level? Broke above it, and that turned into support until it was time to get until it gave way right there. So that's absolutely staggering, right? You get that going, boom, boom. Very difficult, very, very difficult to get around that. That's tough. Now the pullback's on. You can take the New York range if you want, something like that. Now you're just milling around. Very tight scalps. You could probably get away with this level right here, short. Questionable, though. Down here, you know you have a demand zone set up. The bidders were there. That area right there, that 38%, right around 51.89, maybe 51.90, 92, somewhere in there. You have an opportunity for that late in the day. It's not a bad trade. Copper. Copper's the one that's sort of interesting today. It's up about 3.5%. The range is astounding. Today's range in copper was huge. I mean, you went from a high of about 652 to a low of 589. I mean, what is that? 50 cents? What is that aggregate range? I mean, what kind of swing is that? So that's 11. That's 1152. So 63. So, you know, what do you got here? 652 divided by, let's see, 63 divided by 652. I mean, that's about a 10% swing, something like that. That's staggering volatility from top to bottom. How could you trade it? Well, I mean, the long was way back there. That's already gone. Should we be thinking about going long copper? Probably. I don't really see a world where copper doesn't move sort of in tandem with gold and silver, right? Spike low, spike high, pullback, 566. Not bad. Little bidding opportunity. Do you think you get an opportunity down there, though? Maybe. These markets are so wild, you have an opportunity to get it. I like it down there. Right down that zone. It's pretty solid. Still got a bullish read, no question about it. That right there, nice demand zone, nice compression, and then a break. Yeah, I think buying the pullback's probably a pretty good way to do business. So something like this, weekly, you go with a 2-week chart, but where it really gets fun is when you see price break and get into a state of disequilibrium. When you get into that disequilibrium state, you've got a chance to sell with confidence or buy. In this instance, I'm interested in buying. You'll notice that tops right around 52, 652. That's not an accident. You went right up to 650, had a debate. The sellers have won for right now. They've defended it. What's the next level? Up above 650. 675. What's the next level after 675? 7. Remember, quarter handles are a big deal. 0, 25, 50, 75, 0. 0, 25, 50, 75, back to 0, all right, or 100, however you want to look at it. 25s are big. 25s are big, especially in commodities. And that goes back to the pit days when everybody was betting quarters and eights and all that stuff. If you're from Europe and you don't know what a quarter is, I understand. It's just a divisor by 4. That's it. So an even number divided by 4. Increments of 25. Centimeters, inches, whatever. It's all the same. All right, everybody, I'm going to go ahead and sign off here. We'll check back and see if we've got any action on our 9 EMA. Other than that, I mean, it's been an interesting day, incredible day. Tomorrow, we're going to be back live everywhere. This was just our Switch Markets webinar. We've got another gold and silver, how to trade gold and silver webinar lined up for next Tuesday. I'm on this channel. Feel free to check in. We'll have some trades lined up. I'll probably be able to articulate the ideas a little bit better than I did today. The futures, the relationship between futures and spot on the metals markets, boy, I mean, that can really get the best of a lot of people that aren't, I honestly just don't have the experience and haven't really read up on it. So be careful with these concepts. Take your time, unpack them. Admittedly, what I started with today was pretty difficult. I probably shouldn't have done that. Trading the US PPI fallout is tomorrow. We're going to have a lot of fun trading tomorrow. I think it's going to be a great trading day. I really do. Let's go ahead and check back on our 9 EMA. And you can see you got some stuff setting up right here. Buy setup on XAG. Did we have a buy on XAG? Sure enough did. So that was your sell. That right there was your buy. Interesting stuff. Sort of a pullback. You had a nice stop out point down here, though. Good stuff. Really a nice, robust run. I mean, these markets are really something else. Let's throw a U.S. Tech up here. 1 minute U.S. Tech. Right here, did we get a trade? Nope, 69.64. Got to be above 70. So nope, we don't have a trade there. Did we get a 5-minute trade maybe? Nope. Interesting stuff. Yeah, we got some historical stuff back there. All right, everybody, I'm going to go ahead and sign off. But, yeah, keep an eye out for those EAs and things. We'll have a new page launched, and I'll show you guys exactly where to find that stuff when the time comes. But I still have some work to do on that EA to make it nice and pretty, but it's not bad. I like it. It's interesting. All right, everybody, have a fantastic trading day. Thanks for joining me. Be careful. Caution is always the better part of valor. You've got to be careful with these markets because they can get away from you and get away from you fast. All right, everybody, have a fantastic trading day. As always, trade the action well, and we'll talk soon. See ya.